Ever wondered if you could make money by staring at a chart? Stocks, those lines moving on your screen. In just 8 minutes, I'll teach you how to read them and start making real cash. Let's dive in and start learning. Alright, so here's what you'll learn today. We're going to break down how stock charts work, the key things to look for, and how even beginners like you can start reading them like a pro. A stock chart isn't just a bunch of lines, it's a story of supply and demand. Think of it as a visual map that shows where the price has been and where it might be going next. While line charts are simple, investors love candlesticks. They show the open, close, high, and low of every single day, giving you the full picture at a glance. By the end of this video, you'll know how to spot trends, whether the market is breathing in or out, and understand those basic numbers without the headache. The goal is to start thinking like an investor. No jargon, no boring stuff, just straight up basics with examples you can actually use right now. Keep it simple, stay calm, and let the data guide you. You've got this. Now, let's take a look at our first real-world example. Okay, before we dive deep, let's break it down. A stock chart is like the heartbeat of a company. You know when you look at a graph and see it going up and down? That's how the stock price changes over time. Imagine this. You buy 10 shares of a company for $10 each, so you spend $100. But if the price goes up to $12, your shares are worth $120. That's a $20 gain, my friend. Each of those ups and downs on the chart tells you something important. If you know how to read it, you can understand whether the company's doing well or if it's on the way down. Let's zoom in on the chart. You see two things mostly: candlesticks and the price line. The candlesticks are the main part we look at. Each candlestick shows a range of prices for that day. The top of the candlestick is the highest price, and the bottom is the lowest. The middle part? That's where it opened and closed. You want to focus on the green and red ones. Green means the price went up, red means it went down. So if you see a lot of green candlesticks in a row, that usually means the stock's trending up. Red ones, not so great. But it's not always as simple as that, so let's keep going. Next, let's talk trends. No, not TikTok trends, I mean stock market trends. When you look at the chart, you'll notice it goes up and down in waves. If you see the price going up consistently, that's an uptrend. If it's heading down over time, that's a downtrend. Real-life example, you remember Tesla, right? Back in 2020, it was on fire, going up like crazy. If you knew how to spot that trend, you could have made a nice profit. But if you only looked at it for one day, you might have missed the bigger picture. Trends are key. Welcome back. Today we're exploring the invisible forces that guide the market. Support and resistance are like the invisible walls in a game. One holds the price up, the other pushes it down. Support is the floor. It's where the stock price tends to bounce back up after dropping. Resistance is the ceiling. It's where the stock tends to get pushed down after rising. If a stock trades at $100 but bounces every time it drops to $90, that $90 is your support level. If it keeps hitting $110 and drops, 110 is a resistance level. These levels define the limits of price movement. Identifying these walls is the first step to mastering the flow of the market. Stay calm and keep learning. I'll see you in the next lesson.